Hey guys, this is Jason at Hard Money Bankers with your Private Money Minute. A common thing in buying bank-owned properties, especially off the MLS, is sometimes they have deed restrictions or encumbrance restrictions that you really need to be aware of. And a lot of, especially newer real estate investors, don't even think to look at it. So here's a recent one that we were doing a loan on. Here's the deed, right? Here's the deed restriction language. This is just in the contract. And a few things, if you look at the highlighted stuff at the bottom, two things. So the guy cannot, or the borrower cannot, the buyer, the renovator cannot buy the, cannot resell the property for more than $96,000 after 3 months. But more importantly, he can't get a loan on it for more than $96,000 for a period of 3 months. Now, the purchase price on this was about I think it was exactly $96,000, and he needed like 40, 50 grand of work in it. So he came to us for a loan of close to the whole thing, and even if we wanted to, we couldn't provide him that because there's an actual deed restrictions that banks put in place as the seller of the properties that you record it on the deed, so you can't record any instrument for sale or for a lien above the $96,000. And typically the reason that they're doing this is they want to prevent flippers from that. Now that's not the case in all of them, but it's something to be aware of. What I've learned from experience is you can negotiate that out of it. That's just, a lot of banks just kind of put that in as kind of a template to prevent flipping and things like that. But a lot of these, how we got around this is we went back to the owner, or went back to the seller, who was the bank, and said, listen, I get that you don't want us to do a loan any higher than this, but that being said, it's going to need a lot of work. I need to get a loan. I'm getting a renovation loan for the majority of it, for more of it. So that being said, that got worked out, and then they just left the deed restriction in there, which wasn't a big deal anyways because he was flipping the property and it needed a good amount of work anyway. It was going to take him more than 3 months, so it didn't really matter on that end. If he was looking to wholesale it, he would have run into a problem because he couldn't have wholesaled it for more than what he bought it for. Obviously, you can, a different topic related to LLC assignments or figuring out the way to kind of manipulate the contract, sell it for exactly what you're buying it for, and then take a fee on the back end. But whatever the case is, just something to be aware of. It happens a lot, especially on bank-owned properties, so make sure that you have a savvy real estate agent that you're working with and to look out for that. It's under the deed stuff, and it's deed restrictions or encumbrance certificates. Hope you found this helpful. If you've had any challenges related to this and you need some help, comment below. The community will help you. Like, comment, share, subscribe. This is Jason with your Private Money Minute.